Here's the 30-second lesson on what legends know. Never practice nunchucks in a crowded room. Never eat chole before a road trip. Always take your shirt off before you iron it. Don't take a call near a swimming pool. And don't forget, saving is not investing. Legends don't just save, they invest in mutual funds. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this episode of Macro Sutra. I'm TCA Sharad Raghavan, Deputy Editor at ThePrint, and today we're going to be talking about something that is not to do with macroeconomics or inflation or growth. We're going to be talking about central bank digital currencies and cryptocurrencies. Now, there's been a lot of interest in this recently in the world, and to discuss all of this, what the concerns are, what the issues are, we have with us Radhika Pandey, Associate Professor at NIPFP. Thank you so much, Radhika, for joining us.
Thank you, Sharad.
So now, Radhika, we have been seeing a rising interest in central bank digital currencies.
Right.
But could you tell us, which countries and how we know how much the interest has been growing?
Yeah, so in order to gauge the interest of globally, what is the interest of central bank digital currencies, a very important resource is the BIS survey of global central banks.
Right.
So there's this Bank for International Settlements which conducts a survey of central banks across the world, and they provide them with a questionnaire to try to find out if they are making some progress on the digital version of their sovereign currency or their fiat currency, and for what purpose are they looking at rolling out a digital version or the central bank digital currency. So this is an annual survey which is conducted for central banks across the globe, and we have this survey findings came out towards the end of June for the year 2023. And there we see that out of 86 central banks participated in this survey,
Including RBI.
Including RBI, yes, and 94% of the central banks said that they are exploring the use of CBDC.
94%.
94%. And now there could be at different phases. There could be some central banks who are at the research phase, that they are just trying to understand what purpose the digital currency can be put forward to. There are some countries that are in a relatively more advanced stage, so they are going into experimental phase or what's called the pilot phase.
That's like India.
Like India, yeah. In 2022, RBI initiated pilot of both the wholesale and retail CBDCs. So various countries have different objectives for rolling out of CBDCs. Some are more in favor of retail CBDCs, which is the use of digital currency by persons like us, not the financial institutions, but by households, by retail individuals.
The lay public, basically.
For person-to-person transaction or person-to-merchant transaction, just like we use cash or we use UPI, that purpose. So that is retail version of CBDC, and wholesale CBDC is when it is used amongst the financial institution. For example, banks are using for settlement purposes, or there is an interaction between banks and RBI. So when they are using that is the wholesale version of CBDC. Also for cross-border payments, also wholesale CBDC is used. So there are different use cases. What the survey tells us is that the change that has happened in 2023 is that there is a greater interest in the wholesale version of CBDCs, both from the perspective of advanced economies and retail central bank. They are more inclined to first look at the wholesale version, because in retail version there are several questions that they have to grapple with, and we can talk about those issues. But if we have to in summary talk about the interest, yes, the interest is rising and there is varying level of interest. The interaction with the digital currency is at varying speeds across the various central banks, and what broadly we see that there is a greater interest for wholesale version rather than the retail version, because wholesale can also be used for cross-border payments, and that is one area where there's a lot of pilot projects going on. Like, there's a project called Project Mariana, where a couple of central banks are interacting amongst themselves to settle cross-border payments, because there is this understanding that cross-border payments is quite time-taking. It has a lot of costs involved. There's a lot of frictions involved. So CBDCs are being used for this purpose.
And now, could you give us an idea about what some of the major countries are that are going for CBDCs, as in is the US or the UK? Or
Yeah. So what we see is that most of the advanced economies and emerging market developing economies are going in for CBDCs. G20 countries, most of the G20 countries are rolling out CBDCs, but most of the CBDCs are right now in the phase of pilot or experimental phase. If we want to talk about those examples where CBDC has already been rolled out, there we have only 2-3 examples. Like Bahamas is one example. Where it is being used for the purpose of promoting financial inclusion, because there the islands are at remote places and it's very hard to set up ATMs, and to ensure that the government schemes are reaching, central bank digital currency is being used. So there are these 3 countries where it's actually been rolled out. The retail CBDC for laymen like us, it's been rolled out, but in most of the other countries, it is either in the research phase or in the advanced phase or in the pilot phase. For example, in India, it's in the pilot phase for both wholesale and retail. It's very useful to look at the recent report on currency and finance, which was released last week. It gives some numbers about the usability of how many people are using the CBDC, the retail version, in the pilot project. So we see that around 50 lakh persons are using the retail CBDC as part of the project, and around 4 lakh merchants are using. So it's rising. But one of the concern that the RBI governor raised was that there is still greater preference for UPI. So the kind of rollout that they were expecting, that's not taken place, because there is a preference for UPI. So they are more trying to figure out how to make the retail CBDC and UPI interoperable, which is also increasing, but still there is greater preference for UPI. Therefore, what now they are looking at is CBDC for financial inclusion purposes, for offline payments, for making sure that the government schemes, whatever money is to be sent, that can be used through CBDCs. So programmable utilization of money, that is what is happening.
Right, and I feel that there amongst the public also there is largely a lack of information, which then is leading to a lack of trust, where they're saying that, look, we know about UPI, we know that it's dealing in the rupee. What is this CBDC thing, and why should I transact using it?
Absolutely. And the other thing is, in India, CBDC is like cash, and people still prefer cash. Those households who prefer cash, they will prefer cash for at least
physical cash.
For physical cash, for making their regular day-to-day transactions. So the shift has not taken place on expected lines, though it is picking up at a gradual pace.
Right. And so now when we talk about central banks increasingly thinking about adopting CBDCs, what are some of the issues that they're coming up against? I know that one of them is whether CBDC should be interest bearing or not interest bearing.
So that is one of the most important consideration that they have to figure out when they are talking about whether to roll out CBDC or not. Whether CBDC, if we are holding CBDC, should it offer us interest or not? Because if it is an interest bearing CBDC, then it is no longer similar to cash. It's
Or a
not
currency,
just
yeah.
yes, it's not just the digital version of currency, which is the standard definition of CBDC. Then it is more in competition to bank deposits, because bank deposits offer us interest. The argument that is given in favor of having an interest-bearing CBDC is that it promotes monetary policy transmission, because if the RBI or the central bank has raised policy repo rate or reduced policy repo rate, it gets transferred immediately, it gets transmitted immediately if we have an interest-bearing CBDC.
Because this will
It's
create a connection between the people and the RBI
RBI,
directly.
exactly, because this is the liability directly of the central bank, just like cash, and we are holding accounts, we are interacting with the central bank either directly or through intermediaries. So there is no question of whether banks will transmit the reduced interest rate or not. So it happens more seamlessly as compared to through banks. So that is the argument in favor of having an interest-bearing CBDC. But the argument against it is that it creates a ripple effect, or it creates problems with the banks, because then CBDC becomes a competition to bank deposits.
Right.
Then banks will have to offer higher interest rates in order to encourage people or incentivize people to maintain deposits with them rather than holding interest-bearing
And this is
CBDC.
already a problem they're facing.
That's already a problem that they are facing. We used to look at credit deposit ratio is quite high, and one of the implicit implications of raising the LTCG could be a move towards bank deposits. One of the downside implication. So that will again create problems, and then banks would have to rely on other high cost mechanisms of funding. They would have to raise funds through, say, certificates of deposits or other sources, which will further compress their margins. Right now we are seeing that banks are in sound financial health, but if there is a greater interest towards interest-bearing CBDC, then it could compress margin. So that is the understanding in India. Here we are very clear that the CBDC rollout will be a non-interest-bearing CBDC,
Right.
but that is not the case globally. If we look at the BIS survey, it's 50-50. There are some central banks who are still in favor of rolling out an interest-bearing CBDC, and most interesting example is of Israel. Israel has already come up with a plan of issuing shekel, which is their fiat currency, as an interest-bearing CBDC, because they feel that that will spur competition amongst banks, and it will encourage banks to lower interest rates quickly rather than not having in contrast to not having an interest-bearing CBDC. So this is one example, and there's a lot of literature on this. The IMF is writing, the BIS is writing a lot about this. So it is an evolving field, and that is one reason why retail CBDC is taking time, because this is one decision that central banks have to grapple with.
Absolutely. And now the other thing that central banks are very concerned about across the world, not just India, are private cryptocurrencies, things like
Absolutely.
Bitcoin or Ethereum or
Yes.
Dogecoin or any one of them.
Yes.
They're highly volatile, and there's a financial stability risk there. So now are the central banks looking to have, if they do bring in a central bank cryptocurrency, then are they looking to replace the private ones with this, that more people will move to the official one away from the private ones?
Yes, that is one major motivation. If you look at the BIS survey, that they want to preserve central bank money, and they want to preserve the sovereignty of their currency, and they want to ensure singleness of currency. That is the term that is being used. But and they are also exploring the use cases of cryptocurrencies to see that what is the purpose for which people are using private cryptocurrencies, and therefore if it is possible for them also to develop the use case of CBDC in that way. For example, right now what's happening is that a lot of remittances from the US to Latin American economies are happening through stable coins, because there are a lot of immigrants in the US. They want to remit their money to their native countries in Latin American countries like Mexico, and a lot of those remittances are happening through stable coin. So stable coin is a kind of private cryptocurrency, but here the value is pegged to another official currency. It could be dollar, it could be a combination of other assets and so on. And it is being happening through what is called the USD coin, which is a stable coin, which is pegged one-on-one to dollar. So there is a greater interest in using stable coins for remittances, and therefore central banks are also inclined to develop CBDC in such a way that it can be used for remittance purposes, because in some countries the share of remittances happening through stable coins is rising at an alarming pace. So that is one use case. And overall also nowadays there's a lot of, in parallel what's happening is that it's now mostly understood that banning cryptocurrencies is not the solution.
No, absolutely.
So and in fact after the G20 presidency in India, where the IMF and the Financial Stability Board came up with this synthesis paper which laid down a kind of a roadmap for regulating cryptocurrencies, it's quite clear that it is essential for countries to have a framework for regulating cryptocurrencies, and that is what we are seeing across the world. We are seeing that many countries, for example recently UK is now out of the EU. UK has set up in its entire financial regulation. Now they are regulating cryptocurrencies and stable coins as well. EU has come up with a framework, and from the second half of 2024, they are going to regulate cryptocurrencies.
Right.
When we say regulate, it means that the exchanges that will provide cryptocurrencies, they will have to be licensed. There will be a consumer protection framework. There will be separation of client assets and consumer assets. They will have to have proper disclosure requirements on what are the risks and returns and so on. So that's the contours of regulatory framework, and that's happening in emerging economies as well. We saw recently Turkey has released a regulatory framework for cryptocurrencies. So cryptocurrencies, there is a greater interest towards regulating cryptocurrencies, and at the same time central banks are studying the uses of cryptocurrencies so that they can design their digital currencies in a way that acts as a substitute for the privately issued cryptocurrencies.
Right, and actually there were some source-based news reports recently saying that in September, even the Indian government will come out with a discussion paper, not its own regulations, but at least the discussion paper, so that we can talk about
and
what
that's
the
a
rules
very
should be.
welcome step, because we need to have some conversation around talking about cryptocurrencies. Right now it's only in the form of addressing the anti-money laundering concerns, but there are various other concerns. We saw recently a cryptocurrency exchange WazirX was subject to a theft, and therefore unless we have a framework, it's what the kind of recovery plan that they have proposed is subject to criticism, because it's not giving enough assurance to the consumers. So there is a need, it underscores the need for having some form of regulation.
And now that she mentioned WazirX, I can actually plug my own story. If you wait till tomorrow or Friday morning, then you'll see I've done a deep dive into what's happened with WazirX, what the regulatory implications are, whether WazirX's solutions are, whether they stand up to legal scrutiny or whether it'll face some legal backlash, all of that. So do look out for the story. And so now we have a few questions from the audience. Aditya asks, he asked that we hardly see any crypto related news nowadays, not counting WazirX. Has the craze finally gone, and have countries and banks around the world realized the fact that this is not a real currency and it's a bubble which will burst in the near future? Or do you think that crypto still has some growth left, considering the fact that technology like UPI is on the surge?
No, see, globally there is interest in cryptocurrencies, as we've seen. If we look at some of the developments that are happening across the world, we see that more and more countries are now developing regulatory frameworks for cryptocurrencies as well as stable coins. As I mentioned, the entire EU now has a framework which is called Markets in Cryptocurrencies. It is called MiCA regulations for the EU, and they have very nicely categorized cryptocurrencies into three categories. categories, and based on that they have the regulatory framework depending on whether it is stable or not. So they are different graded levels of regulation. So there is interest, and countries are now looking at regulating cryptocurrencies. In fact, today the US Fed, or last night the US Fed has retained the interest rate. They had their FOMC meeting where they have maintained status quo. So that has resulted in a slight decline in the Bitcoin prices, because all these cryptocurrency prices are sensitive to what is happening in the US, what's happening on the geopolitical front. So we are seeing that there is a slight decline in the prices, but if we look at overall cryptocurrency market capitalization, just to give a number, it's still around $2.4 trillion. Right. So there is a slight decline in Bitcoin price, which is the most dominant form of cryptocurrency, but overall there is interest. It's only thing, it's quite volatile, and it's subject to a lot of developments tend to influence the prices, but overall there's lots happening across the world on the regulatory front on understanding the use cases, particularly of stable coins, because stable coins is considered more stable as compared to cryptocurrencies, because it could be pegged, but again there are various risks associated with stable coins. So countries are studying those risks, and they are trying to design their regulatory frameworks accordingly. So there is definitely interest in cryptocurrencies, and in fact Russia has recently announced that they are going to use cryptocurrencies for international trade. So there is interest.
Yes, and if you ask some of the market participants in India, you'll see that within India also the market it's grown to about $2 to $3 billion, the assets under management with all of the Indian cryptocurrency exchanges. And what they say is that Indians trading on foreign exchanges is at least 2 to 3 times this amount, or rather 3 to 5 times this amount. So you can see that there is a lot of interest. Now, Saurabh asks, with the US and Russia thinking of legalizing cryptos, what will be the implications on the economy if they become official mediums of exchange or currency in these countries?
So an important distinction needs to be understood, particularly for Russia. What they have done is that they have allowed the use of, they have introduced a legal framework to allow cryptocurrencies for international trade transactions.
Right.
Because a lot of their imports are still to be, import payments are to be made in dollars, and the fact that they are subject to sanctions by the West, they are not able to make those payments, which is resulting in a decline in their imports. In order to circumvent those sanctions, the Russian central bank has announced that they will develop a framework to allow the use of cryptocurrencies for making international trade payment. But internally, the use of cryptocurrency is still banned.
Right.
So it's not going to be used as a legal tender or as a means of payment. They are going to use cryptocurrencies for a narrow measure, which is to skirt the Western sanction. And for America, they are still grappling with, there's a lot of news, and there's a lot of narrative around the use of cryptocurrencies, whether it's a security or a commodity. Because in the US, there are a lot of regulators. There's a Securities and Exchange Commission. There's a CFTC, which is the which deals with commodities and futures trading. And there is this tussle between these two regulators. They try to assert whether they try to there is this assertion where one regulator is saying that it's a commodity, other is saying it's a security. Both are exercising their jurisdiction, and that is leading to some concern and chaos, and it has to become harmonized. And therefore some of the other countries like Nigeria has taken a cue from the US and also declared that they are going to use cryptocurrencies as, they are going to regulate cryptocurrencies as commodities.
Right.
The other difficulty is that across the world, if you look at the various regulation, the taxonomy is not uniform.
Yes.
You know, somewhere it's called VDA, virtual digital asset. Somewhere it is called crypto asset. Somewhere it is called crypto token.
We call it a virtual digital asset, right?
Yeah, we call it a virtual digital asset. So there's a lot of there's difference in taxonomy. There's difference in how we are treating cryptocurrencies, how we are treating stable coins. Also, there are a lot of distinctions. For example, EU's regulation has different distinctions for stable coins. So there is a scope for somewhere harmonizing these regulations to prevent the risk of regulatory arbitrage. And I think the process has already begun. At least all countries, most of the countries have started thinking about regulating cryptocurrencies, and the next step would be to ensure some form of harmonization.
Right. So there you go. There clearly is a lot of interest around the world. 94% of the surveyed central banks said that they are experimenting with CBDCs or thinking about it in some way or the other. Some are in more advanced stages like us. The RBI has already rolled out pilot projects for its own CBDC. So there is a lot of interest, but there are some concerns as well. There's a need for countries to work together on this, come up with some sort of uniform regulations, uniform taxonomy on how you refer to these currencies, whether they're private cryptocurrencies or you call them virtual digital assets, whether they're commodities or they're treated as securities. There's a lot to go over, but interest is growing. So watch this space. You're going to see a lot of action in the near future. But on that note, that's all from us. Thank you so much for watching.